us greedy ass investors that are jacking up these prices.
Oh God.
So, you spoke recently to an agent that she says, if you have a property around 200 grand, she'll take it up. She'll buy it, right? Because that's what she's looking to buy and all this. So to a lot of investors, it's like, cool. That's, I have a property coming up. I'm going to price it that. That's pretty much a done deal. But where we are in the market, it's like, yeah, that is the value of the house. But I know if I put it on the market, it's probably going to get bid up by 10, 15, maybe $20,000.
Yeah.
Right? So you're saying, oh, you're pushing up the prices. We're not pushing up shit. We're pricing it at what it is, that there's buyers willing to pay more for it.
Yeah.
What are we really
like,
just not supposed to sell it?
Yeah, it's like, oh no, I won't accept the 230 even though I want 210.
Yeah.
So you need to lower your price.
What I like is how people act so high and mighty about all these things and greed and everything. Yet, let's oversimplify it. They're putting something on like Facebook Marketplace or some shit for sale, right? And they put it up for $50, and somebody comes in and then it gets into a bidding war. Are they gonna tell them, no? The fair price for this is $50, and I'm only selling it for $50. I don't care that you're offering me $80. I'm only selling it for $50.
Yeah.
I mean, I don't know how many.
That's
people
a
would
perfect analogy when
that
somebody
shit.
says it, like, "Oh, you greedy developers." Like, all right, you post something. That's exactly that.
Yeah.
Post something in Marketplace. You get 100. And I approach you and say, "I'll give you 150 for it," because somebody else said they'll give you 120. You're gonna take the 120 over the 150? Well, no, that's just stupid. How is that two different scenarios?
Because what you got to understand is that the market moves in trends, right? Yeah. And we are a business. We are not a nonprofit. We are not just like money is just pouring into us. So when we have these hot opportunities, we need to, as a business, be able to capitalize on them so we can build up for the lean times, because the lean times will come. Eventually, housing inventory will start picking up. Eventually, more and more people are going to put houses on the market. These things are not going to happen anymore. Then houses, you're going to price them at 200 and they're going to sell at 200.
Well, because also say housing prices, like, that means we're also paying more for our inventory. It's like, that means like our gain was somebody else's gain when we bought this house. Instead of paying 100 for the house, I bought it for 140 because instead of selling it for 200, I sold it for 240. Yeah. So like it's a straight pass through. So it's like we make our money on the margin in between. Yeah. And it's like just because like the prices are going up doesn't mean we're making more money. It's easy to think we are, but it's also like that means the price of everything else that we involved to get us to that point went up as well.
Yeah.
Unless we've been holding on to it for 10 years on a rental property, now you're saying, okay, yeah, I got a huge gain on it. But if you're just like buying and selling like transactionally within less than a year, it's like it's a straight pass through. And whatever we bought it for, somebody else gained on that. Yeah, they owned it for a long time.
And I was just seeing a comment right now from Frank that he puts in Austin, they are calling it the leapfrog effect. Homes that were $450K are now $550K, and homes that were $550K are now $650K. The hottest selling homes are still in the $200 to $350K range. I didn't even know they had a range like that in Austin still. What is that?
I was like, what are you buying in Austin for 200 grand? Like every time I go and look at it, it's like 500,000. Like what?
Yeah, you saw like when you did the Texas market update for the quarter back in March. What was Austin? The median price was like 500 or some shit like that. Like that's nuts.
I think you just have to go further and further and further out to get to those price ranges.
Right. Yeah. You got to, but I mean, at that point, like it's very crazy to see where the market, but again, going back to the same point is you got to look at the data, guys, because if you're sitting on the sidelines right now, hoping and waiting for the market to crash, first of all, right now, as of April 30th, 2021, there are no signs that the Texas real estate market will crash right now. Could there be something macro that happens, right? Macro means worldwide, United States wide, another virus, an opposite virus that staying inside a house is bad for your health. I don't know. Something crazy happens, then yeah, I mean, at that point, everything's going to take a hit. But that being said, like, there's no actual sound facts or stats to show that just because we are at all-time highs means that we're not going to go higher or we can't go higher. For all we know, this is going to be like the bottom of the next trend, right? Where
Yeah.
this is like, man, I remember when houses were selling for 220K, you know, and now they're selling for 300 because guess what?
Well, then it's also, if you're trying to think of housing that way, like stocks and bonds and stuff like that, then you shouldn't be trying to buy a house.
Yeah.
Unless you're like
Yeah.
a professional investor or something like. But if you're looking from a homeowner's perspective, it's like if you're looking at that because you're thinking like, oh, in the next year my prices could go down. You don't buy a house thinking you're going to live in it for a year or two. It's like if you're buying a house as like a homestead, you better be planning on staying there for 5 years.
Yep.
And just like and hope that like. Because, I mean, over a 5-year period, there has only been one time in history where prices went down. Maybe not history, but recent history where prices went down over a 5-year period. And I think even in Texas, like it still wasn't down drastically over that time frame.
Well, we've
Like-
analyzed over a 10-year period, going back, I think, like 80 plus years. Over a 10-year period, doesn't matter what 10 years you pick, even if you picked, you know, starting in 2007 that you bought, like right at the peak to 2017, like houses always go up.
Yeah.
In a 10-year period, houses
went up.
always go up.
But then there's the argument, well, that was because interest rates dropped. And like, yeah, interest rates did drop, but
Whatever
houses
you
still
want to
went up.
use to, you know, justify it, they still go up.
'Cause it's like, I'm not going to bet against the powers that be that control the world monetary system.
Exactly.
Even though they say, well, they have no tools left in their tool belt. They'll come up with new ones. Like
And
they always do. They always have.
The population is growing. It's not getting smaller, right?
Yeah.
People divide. They multiply, I mean. So people are multiplying consistently. That means more people after less land because we're not producing more land.
Can't produce.
So
Unless Elon Musk comes out
Yeah.
to build platforms in the sky for more
or Mars.
or Mars.
But so that's kind of the things that you got to understand and analyze when you're looking at the market. This is not the time to sit on the sidelines because you could find yourself on the sidelines for the next 5 years, 10 years. You don't know.
Well, I mean,
right?
it's just one of the things you hear that about people that were from the industry in like the early 2000s that were used to or been through several market cycles or been through several things of a housing and prices increases to where it's like they're using their experience. And I mean, it's good, you should, but it's also, you can't be stuck in the old ways of the world, way the world used to be and try to use that to analyze today's market. Like you need to adapt your investment strategy of the current market environment using your past experiences.
Right.
But a lot of times they get stuck with their old past experiences and they stay there.
Well, you and I have studied many economic books and you know, economics themselves and all these things that happened in the past. And one thing that we are always seeing is that shit is always changing. Like you can't use that, you know, when I first started in real estate, they used to talk about the, 5-year, 7-year cycle, right? It will go up, it will come down, it will go up. That's the cycle, the real estate market, yada, yada, yada.
Yeah.
That hasn't been the case. That has not been the case since like the bottom in 2009, you know, that we haven't come back down again. There hasn't been a cycle. And you can try to justify it being a cycle in like certain micro markets in this area or that area, but you got to look at it as an overall. So as an overall, if those trends are no longer holding true, then what the hell are you doing? You know what I mean? Like you can't do that shit. Like you can't analyze that way. Like it makes, you know, you're hurting yourself. So with that being said,